Abhishek, good morning. We are talking about ArisInfra Solution. The IPO starts from 18 June to 20th June. The price went around 210 to 222. And if we talk about the business models, the company follows B2B model, single stop intermediary between vendors and construction players. What's your take on the IPO?
See, broadly, if we see that, as you rightly said, it follows a B2B business model and quite, we can say, an intermediary between vendors and the construction companies. It claims that it provides raw material procurement solutions via IT-enabled platform. But in brief, we can say that it's just a trader which is supplying certain products to the which is working as an intermediary between vendors and the construction players, and side by side it also sells certain third party manufactured products. So if we talk about the critical red flags in this company, is that one, that suddenly in 9-month FY25 it has reported a profit after reporting losses for consecutive previous 3 years. So we don't know what kind of a profitability trend going forward, because you need some kind of a trend on which you can build up future growth prospects. So here that is not there. Second, that there is a limited room for margin expansion, because ultimately it's a trading business, and whomsoever is hiring you for services, he requires you to deliver best quality of products at reasonable prices. So I don't think that there would be a significant room available here for margin expansion. And the critical red flag in this company is that ultimately the key attribute of this company is to manage the working capital, even though it is out of this 500 crore which it is raising via this IPO, almost 45% of the fund will be utilized for the working capital management. So it means that it is raising fund for the from the long-term resources and utilizing that to fulfill the short-term requirements. Definitely, it's a misallocation of the capital, and because of that, we don't know that in next year when it will again require this kind of a working capital, where from it will raise the fund. And this working capital pressure is a critical issue here, is that because even though it has reported optically improvement in its financials, but that has not been reflecting into the operating cash flow, because irrespective of the improvement in the EBITDA margin, your operating cash flow is negative because of the significantly high working capital, because of this receivables and payable difference. Your working capital days are over 100, which is a critical risk associated with this IPO. Fourth thing that we can say, that it generates almost 95% kind of its revenue from 2-3 states. If it is an IT enabled platform, so it should have a pan-India presence and pan-India connection, but that is not visible in its overall performance, even though it claims that it has over 2,500 customers, but top 10 customers account for around 48% kind of its revenue. Means the revenue is not widely spread. So considering that there is no meaningful moat is available in this IPO in this company, and on the basis of that, we can assign roughly we can assign it a 2 marks out of 5.
All right, that's the view coming in on ArisInfra Solutions IPO. Of course, limited margin expansion possibility and working capital pressure are some of the key red flags that Abhishek has pointed out. But moving on, Sharan, I would like to come to you and ask what is your view on this IPO, and what would you recommend investors who are looking to put their money in this IPO?
So, good morning, everyone. So, as Abhishek rightly pointed out, more or less the company is just a broker between a distributor and a builder or an infra company. So, it will never have any kind of pricing power going ahead, because the prices are decided by the distributor, and the builders and the infra company more or less know the prices that are going around. So, it will never have any pricing power. Again, cash flows negative throughout the last 3 years, because the margins are razor thin, negative to 1%. Even I checked their competitors' balance sheet, being at least like 5 to 10 times larger than ArisInfra, they do an average margin of just 2%. So it shows this whole tech-enabled platform or being a broker doesn't have any pricing power. So you will never ever see margins, PAT margins going about 2.5%. So very razor thin margins, a very big negative. Because of this margin, they will never be able to generate any kind of cash that they can use for future expansion. Again, working capital is a big issue. When they sell, they give credit around 100 to 120 days, but when they buy, they have to make payments in 60 to 70 days. So this gap will create a lot of working capital issues for the company. Overall, it's called a tech-enabled platform, but it does nothing. It just brokers a deal between two players. One big red flag is the IPO money raise. So basically 200 crores they are raising is to just to pay back a promoter entity or their parents. So they will reduce the debt clearly by paying their parents or promoter entity, not anyone else. So that's a bit red flag. And again, after the IPO, the promoter holding goes down below 40%. So their skin in the game is very low compared to other promoters. Again, a red flag. Overall, my final verdict will be basically a low margin business, no pricing power, negative working capital. Working capital issues will be there going ahead also when they expand. So overall, my final verdict will be an avoid. It will take a lot of time for this kind of industry to show any kind of improvement going ahead.
Okay.